Hello, traders. It's Steve from the Stock Index Trading Room, and it's my favorite time of the week. Weekly recap. I hope it's becoming one of your favorite times of the week as well. We are continuing our teaching of how we're trading. Some of our members are trading more from the market edges than continuation moves. Most traders, to be honest, would rather trade with momentum, with intent, with trend, rather than from the edge, which is always going to be, to a degree, counter trend. Okay, but we have some experienced traders that were saying, Steve, we like the continuation stuff. But can you come up with some ideas where we can work from the edges? That way we might take a position, and then as we get our continuations, we might build a position. So that put us on a quest to look for reversing situations, and we're going to show you one that is a room favorite that we use quite a bit. And we're just going to exploit order flow breakouts from the edges and show you how they find an advantage. While you're reading this, we're going to show you market entry signals that have a track record. We've traded this specific pattern for 2.5 years. We've had it 2.5 years, so people that like it have traded it that long. We may never have another entry that wins. We may never have another entry that loses. I'm going to show you a weekly recap. And to be honest, it's a bit light. It's just a hair under where super long-term statistical probabilities would have it. You know, that's okay. That's the way trading works. I'm going to go through this pretty fast, teach a little bit on a chart, and you can go back through this, or you can reach out with questions that you might have. There's really only two key components or concepts that are necessary to become a master trader. One is, what is the likely direction of market movement? And two, where do I, as a trader, exploit this? Where do I enter the market to take advantage of this? Entering the market from an edge, and I'll show you what that is in a minute, gives experienced traders a huge advantage over other traders. And in the Stock Index Trading Room, we are obsessed with proving market entry strategies that help our traders succeed. Price follows order flow. I think most of you know that in pretty much all market conditions. So if we're using order flow breakout signals, it stands to reason that advanced order flow patterns give experienced traders winning entries into the market, and they'll prevail over other traders. The question then becomes, using the tools we have, can we find reliable repeating price patterns that give us an edge in our trading? Trap Trader Oscillator was coded, designed, refined, tested, 4th generation. We are using the 4th generation of TTO now, from World Cup trading champion, master trader, master coder, Rob Mitchell. And what Trap Trader Oscillator does, per its name, it shows us where traders are trapped on the wrong side of the market and are likely to get exploited. And that trapping and breaking of their entries, running their stops, proved the fuel to fire the market in a direction. And people that know how to take advantage of that, obviously, do better than those that don't. So all we're looking for is order flow breakout, and then we're going to look at it from the market edges. And we have a pattern. I have a specific price pattern I'm going to show you that is 100% objective. No, it's 100% objective. And you'll see what that means in a minute. And I think that's incredibly important as a basis point to start. We're going to look at charts here. You've heard us say Stock Index Trading Room is not a one-trick pony. And here's the reason. I'm going to do this real quickly. Most traders have developed a concept of what winning trading is over months or years, however long they've traded. And it's very difficult, regardless of the level of success or lack of success they're experiencing. It's very difficult for humans as people, but traders especially, to admit, I may be on the wrong track. And so if we offer one strategy, one system, in this case, counter trend edge trading. Well, if you like to trade with price and you like to trade with momentum and you like to get in a trade and it goes immediately, counter trend edge trading is not going to be for you. And it's very difficult to change. It's not as hard as people think. It's very time consuming, and most people give up on it. Now, I spent 35 years as a performance coach teaching professional golfers how to change their mindset into a winning mental approach. And once they did that, they won. And we do the same thing with our members in the room. So it's probably easier to find a strategy that we have that makes sense to your belief structure. And then over time, if you decide you want to adopt something else, then it's a whole lot easier. So we're not a one-trick pony. We offer traders of every imaginable level and experience of trading help and advantage to improve their trading. However, if we were a one-trick pony, this probably is a pony that we would ride all the way to the winner's circle. And let's go ahead and look at charts and look at the pattern. And I'm going to show a recap up here with trade markers, and we'll be through. This is from Friday, July the 22nd. Questions, support at Stock Index Trading Room. For more information about who we are, or you want to come and join us and take advantage of this, go to our website, stockindextradingroom.com. Be sure to watch that little 5 or 6 minute video to the end. There's a nice coupon code at the end of that. That is still in effect, and we'd be happy to offer that to you. So here's what we're going to look at specifically. Our first criteria for assessing whether this is something that we want to get involved in or not is trap trader oscillator, this first panel of indications, is it undervalued or oversold? I like undervalued better. Is it undervalued? Yes, it is. Does it tend to go up from there? Yes, it does. All the time? Nope. There's an advantage. There's an advantage. You know, if it's overvalued, does it tend to go down? Well, it didn't there, but it did here. Well, why did this not go down and this one go down? I'm going to show you that. Okay. So as we look, trap trader oscillator overvalued here, we tend to go down a bar or two or a lot. We're undervalued, we tend to go up, and undervalued, we tend to go up. But we can get on the wrong side of a trend here and here. So we qualify that more than just being overvalued, but that's a really good place to start. Really good place to start. So we look at trap trader oscillator defining the edge for us, and you can see it does a remarkable job. So the next thing we're going to look at are these red and green horizontal lines. These dots are called smart breakpoints. These are called smart breakpoint lead outs. And when the market fires through that, that is called a sell, trap trader oscillator in extreme, TTOX, sell lead out, okay? Buy lead out. And you'll see these and you'll go, huh, I like that. And again, though, you can get caught up in chop. We have worked tirelessly to come up with strategies that don't give signals in this, you know, just for the traders that want to steer clear of choppy markets that don't go anywhere. Okay. And we can't entirely do that, but we're better than a sharp stick in your eye. So here's the pattern we're looking for. It's a single bar, trap trader, Super Smart Renko bar, a single bar engulfing pattern, not to engulf the candle, the bar before it. Okay. What it engulfs is trap trader oscillator, smart breakpoint, green and red. Okay. So this is an engulfed order flow right here. Trap trader oscillator is breaking through that. You'd never see this on your chart, ever, ever, ever in 100 years. You would never see this pattern on your chart. And yet trap trader oscillator is showing us, okay, from an order flow standpoint, we're breaking out from an undervalued, oversold area. Well, that's a pretty good place to get started in the market, in my opinion. Here we have trap trader oscillator is above the purple line, but we don't fire through our midpoint line. Okay, this actually is a continuation. This is a spectacular continuation buy signal for the people that would be wanting to go that way. Okay, now what we're focused on today is edge trading. So trap trader oscillator is overvalued. We break through this red and this green. It's showing us that order flow is engulfed right here. You'll never see it on a chart. We can tell you, and this is new in the room, we have over 90% level of confidence that this point is going to be taken out before this point is going to be taken out. So here it chops around and it, of course, does that. But that would have been a little bumpy and whatever if you had decided to do that. I'm not marking it because it worked great. I'm marking it because it's a signal. We're still, the large accounts are still settling their accounts, balancing, initial balance period it's called. So this, we anticipate this being kind of choppy. Some traders don't mind not wanting to miss a potential move. Other traders are going, let's let it spread out some and go from there. Okay, so here we are, we're moving, and all we're looking for, can we get overvalued and do we fire through green and red? Overvalued, red and green, overvalued. Oh, here we go. We're overvalued. We fire through this red, smart breakpoint lay down, and this green, smart breakpoint lay down at the same time. So that's a sell for us. Okay. That bar right there is sell. Now, this is brand new in the room. This is 90% level of confidence to take this out before it takes this out. And I teach a couple of things here. You can see we broke through 2 smart breakpoint lead outs. Okay, that's twice as good as one, and it really is. And we took this point out, and I'm going to mark it this way. We took that point. We took this bar out. Okay, there's over a 70% probability that we're going to take this out. There's a higher probability than that, but we're about 70% to get here. Wish it was a little higher. Now, the good news is that we're going to use a relatively tight stop with this. And let's see, that's 1, 2, 3, 4, 5, 6. That's 6 points. We have a 70% probability that we're going to take 6 points out. We're going to use an 11 tick stop. So money management reward to risk is what, 3.5 to 1. So that's a pretty good criteria in our opinion. But again, that's advanced. I will tell you this, once we take this point out, if we do, my level of confidence is 90% that we're going to come down and take this out. Now, again, this is brand new. You've not heard me talk about it. We've only been doing this a couple of times. I mean, a couple of weeks in the room. So here we've got targeting, local targeting to take this out, long-term structure targeting, as long as we take this point out here by a couple of, but we use 2-bar rule. You know, we don't want to get caught up in this mess. Then our level of confidence of taking this out is, my personal is 90%. I've been trading this for about a month now, and it's a lot of fun. So anyway, I'm going to move this a little. I was afraid I was going to hit my arrow and move my chart here. So there was our entry. Okay. We call this pattern, since it takes out red and green, it's a single engulfing bar. It engulfs trap trader oscillator. You'll never see that on your chart, ever. You'll never see a takeout of this in this. But trap trader oscillator is saying, yeah, buddy. And of course, there we go. We take that out. We get below this by 2 bars, our level of confidence now of taking this out. My level, we're working to get our members there. My level of confidence is huge. Now, our more experienced traders have no problem with that, obviously. Okay, so A lot of insight into this. We had our breakout pattern, we had TTO target, and then we had structure target. And you see we hit all of those 5 minutes, 14 points in 4 or 5 minutes. So that turned in. And then, you know, our old school stuff, just right above, got some good stuff here for 5 points. Structure stays down for a long time. I'm going to go ahead and move this out of the way. I did want to teach you that. That's something new that we're doing in a room. And I've got a couple of other teaching points to make here, and then I'll show you the recap and we'll be through. Here we have a situation I wanted to bring your attention. Once you start to trade this for a while, you'll look and go, well, we didn't go through green and red. Maybe because green was way the heck down here and we can't get under that. Okay. But you can see we've got some, again, some other stuff in our indicators that say, you know, that would be, I don't know that you want to trade 4 or 5 different things at once. Some of our members do. But we get here, we've got trap trader oscillator overvalued, but we come down, we don't even get through this midpoint. We call this a spaceship. You've heard us talk about spaceships before, and that's a super high probability to go up. So we're here, we're sideways, we're up. Okay, and that's what TTO, trap trader oscillator. So here we break through red and green at the same time, right? So that would be a sell. And I've got a teaching point over here I want to make, and then we'll look at the recap and we'll be through. Okay, so here we've got a spectacular situation to where we get a failure and some divergence and a lot of things, but we get this pattern on a red that ends up on a red background. And we pivot retag into that without any help down here. That's just something that our members aren't missing. Here's a spaceship, this little bitty rocket. And we talked about this in the room. I kept saying, that's enough, y'all. That's enough. That's enough. And we had a super high level of confidence that we were going to take this stuff out, which it did. So we start grinding away here. Where are we going? Yeah, that's a minimum. And of course, we did that again, headed down again. But here's what I want to teach. You can see this red lead out, we really didn't take it out. You could question that and you go, well, that's sort of up for grabs. And I would agree with that. But one of the things you'll notice is for sure we broke here and we broke 2 or 3 here. And you see the market goes up. You might not want to trade that, and you might. We don't have an entry over here. You know, you might want to trade everything. You might see this situation and go, that spaceship's about 90+%, and it is with this setup. Historically, that's about 92 or 3% for 2 points. It's just a monster scalp. Okay. So I wanted to teach that like we did with the green earlier. If we can't take out these green lines, we're probably not going down until we do. And when we do, you can see it broke price action support and away we went. Okay. So what I did this. Let me move this over a bit further. I did this for a week. This is just this past week. 1, 2, 3, 4, 5 days. 9, 4, 6, 11, and 5. So I don't know. Some people go, God, that's way too many trades. Other people go, wow, that's not enough. And however you would feel, if you needed more, you would pick up maybe some continuation, maybe some spaceships or needle bar confirmation, you know, these big long wicks that engulf that. Follow through with that's almost a given, almost a given. But this is the frequency that it traded this week. Now, what we've done here, we're looking, we have 91% to go 1 point. And we can look, there are a lot of trades, okay? There are enough trades in here that we know that's representative. It's 100. It's 86 to go 2 points. There's 8 ticks, okay? 66% to go 5 points using a 15 tick stop. So here we have, for traders that are looking for something longer, we have a strategy that wins 2/3 of the time, but takes more than it gives, which is pretty cool in my opinion. So I'm going to show you some ways that we look at professional money management to do the same thing, but have a higher advantage. We're not going to move any of these arrows. We're just going to manage it a bit different, both in our setup, maybe in trail and things like that. And can we get this 352% likely to profit every time we enter the market versus not profit every time we enter the market? 350% more likely to be profitable on this signal. So that's pretty cool. So what I'm going to do here, because this is set up with very hard order flow reads, we can use a smaller stop. So I'm going to move that to 11 ticks. And we can watch, let's look at the two numbers that matter, 352, $182 is the expectancy every time this prints. Trading it 1 for 1, 1 for 2, 1 for 5. Okay, and I'm going to break this down in just a minute, but we're going to go from 15 to 11 and watch our numbers. We go 180 to 2, 350 to 5. So none of these changed, which is cool. Okay, so we could do this. We go, wow, boy, if a little's good, a lot's great. Go to 7, 185, 500%. I've got a small account, Steve. Okay, you said you can get away with that here. We got a lot of signals you can't do that with. Okay, maximum profit is around 11 for this. This is one of the few signals that you could get by with trading even a smaller stop if you wanted to. Okay. We can look at, say I want to scalp it for 2 points. So here we have a signal. We're going to give 7 and take 8. I wrote an article, Trader World magazine, where I said you can have market entry signals that have your average win percentage greater than your loss and your average win size greater than your loss. And one of the editors contacted me and said, we can't do that. We can't print that. And we talked to them about it. Here we have something that has a 77% for this week track record. 386 makes $57 every time it prints, win, lose, or draw. It doesn't matter. What does that look like? We just take all of that, put it in, and just, you know, that's what it generates with one lick. So when we talk about 1 for 1, 1 for 2, 1 for 5 points, not ticks, points, with 11 or 7 or 30 or whatever, we're just showing you for this week and these signals what it did. We've tracked this for 2.5 years, and this is pretty representative of what this market entry system gives us. We could get crazy here. Let's see if it has legs. Let's take this. Let's do this. Let's look only at 66, 63. If we, trading one lot, I'm sorry, one contract per lot, 500% profit factor. Just some crazy stuff in here. Some days, this won't be as good as other days, but we do okay on each day. So this again is what we do in a room till we our eyes feel like they're bleeding, to recap things and find the very best approach over a long period of time for our members to trade. So we can look at this. We can even go every half hour of the day. Well, I wouldn't trade it at from 3:30 to 4 as the market closed. It doesn't look like there was only one for the week and it didn't win. I might like this in A period, the first 30 minutes of the day. And in C and D, B's good. C and D, 100%. We get over in here. I don't understand that. 100%, 100%. And you can take any market entry signal you want to use, and you can put it through this type of scrutiny. And then you can determine what is my best approach to take this signal, minimize risk, and maximize profit potential. If I take 100, not trade to trade, nobody knows that. Nobody has that. But if we do it over a period of time, you know, what are my probabilities of being on the correct side of professional money management, which is what I teach until people are tired of hearing it. So breakout order flow patterns for market edges. We call this the Santa Claus, red and green at the same time. I've marked these throughout the week. We can scan through this right quick as we're closing. And you can see, this is horrible in here. We don't want this market open. Okay, well, that makes sense. 953. Does that look like about the same time? 954 was the other one. Do you hear what I'm saying? I hope so. Do we get everything? No, we don't. No, we don't. That's kind of choppy. Reverse this again in here. Oh, this is market open. Okay. No, that doesn't work very well. 947. Just a little bit earlier. Upside, we can talk about all the upside. Green and red at the same time. I don't know how long you would, how you would manage that. But traders that want to trade from the edge, they may have some expectations. We have daily targets that are 70, 80 points away. We have some traders that like to trade to that level of awareness, and we have others that want to scalp their way up or down. And the good news is, Stock Index Trading Room, we have stuff for everybody. So if you have questions, shoot me an email, support@stockindextradingroom.com, please. If you want more information, come. I apologize about this. Was not a brief video, but this is, there's a little bit more to this. It is just a simple market entry pattern that has a nice track record. But I wanted to show you the power behind smart breakpoints and order flow and trading order flow, and why our members have an advantage. So on behalf of all the members of the Stock Index Trading Room who are having a blast with this stuff, Rob Mitchell, World Cup trading champion, I'm Steve, wishing you happy trading. And we look forward to hearing your success stories as well.